How can we leverage present profit for a better trade again for the day? Alright, so that is what I call the Catapult trade, which I have used not very often because I don't get a chance to do that. But the simplest way, I'll tell you, the simplest way is like this. Let us say we have established right now a bullish credit spread. Okay, so this is the zero line. We have a big loss potential and a small profit. So this is our bullish credit spread. What is this level? 38,400. So if it stays above that, obviously markets will all the premiums will go to zero. Anyways, right now it is trading around 39,560. So let us take 39,500 level. So the simplest way you can use this particular profit is by establishing a debit spread if you believe that the market is going to move directionally. Please understand. So you have to be very confident in the fact that market is going to move directionally, and that is what I want to capitalize on. What do? You buy 39,500 call and you sell 39,700. So this is your break even. Now what is happening here is you have this profit and this loss for your debit spread, and you have this profit and this loss for your credit spread. But no matter how high go, you are going to make this much of profit. And if you stay above this 39,600 odd level, you are going to make money on this trade. So this profit will offset this loss. And how will the final image look like? It will look something like this. So this is your zero line. It will look something like this. You will still have a big loss. Then you have something like this. If the profit and loss are matching, it will be somewhere close to zero. And then from this point onwards, the break even of your new trade, debit spread, you will get a lot of profit. And for a long distance, you will be at break even, and then you will get into a loss. So this is how it will look. Now let us try it out. I need to put in my exact trade number. So I have a bullish put spread, bullish credit spread. So I have short put that is at 38,400, long puts at 37,900. Okay, what are my prices? 2760 is what I am shorting this at, and I have 1150 as my buy price. What are the quantities? We have almost 150 shares for both, and this is our graph. So what do we have? We have a big amount of loss if the market falls, and almost 72,500, and 2,400 is our profit. Why has this increased so dramatically? Because we added 2 more lots. Okay, again using the asymptote principle. So what basically we want to do is leverage this 2,400 profit and see if we can utilize it. And let's say we are sure that markets will go higher, and we want to exploit that. So what I will do is I'll establish a debit spread. So what you do is you buy a call and you sell a call. So if I believe that yes, there is going to be a good move, so let us say 39,600 call I buy, and I believe that it could go to 39,800, so I will sell that. Let us start with just one lot and see what happens. So if I look at the graph now, interestingly enough, is that if I just take one lot, I have nothing to lose because the cost of that strategy is lesser than 2,400. So that is why you can see I have no loss at all, and I can make money if the market goes higher. So by the time it goes to 39,800, I will be making somewhere around 6,000 profit instead of 2,400. But I am quite confident that yes, markets are going to move higher. So let me make it double. Let us say we establish 2 lots. Now let us look at the graph. Now here you can see we have a small loss if it goes below 39,600, and that is how much? That is just 500 rupees, 450. But our break even is somewhere around 39,610, not much. And then again, if we go to 39,800, we make 9,400 profit. Earlier we were making 6,000, now it is 9,000. So that is good. That is good. That is a good profit. And the upper break even is just 39,610. So the moment it starts going above 39,610, we will start making money. This is how you can leverage your profits on an expiry day. Does it work all the time? Not really. It's not guaranteed. But if it works, then you can make multiples of your planned profit. This is how you can leverage it. Now the problem here is very simple, is that our account size is too small. Let's say I have a good amount of money in my account, and instead of establishing, say what we have 6 lots right now, we have 60 lots. No, you can do so many things in the accumulated profits. Okay, for 6 lots we are making somewhere around 2,400. For 60 lots we will be making 24,000 rupees, right? And in that case, what you can do is you can then decide whether I can risk 10,000 of this on my debit spread. I will risk 10,000. So I won't be risking all my money. I will be risking a certain amount of the profits, 10,000. And then what I will do is I'll establish a bullish debit spread where the max loss is 10,000. So how can you do that? You can just come here. All right. So what we have a loss of around 2,800. So instead of 2 lots and losing 2,800, I can straight away go to 200. I can increase the position size by 4 times. And then what I have instead of 10,000, let's say we have 11,460. But we were having a lot of lots earlier, so our profit was around 24,000, of which you are, let's say, risking half the amount. What is going to happen here is that if this trade works out, so you are making 24,000 on your original position, and if this also works out and it goes to 39,800, you will make additional 28,500. So your profit will more than double, because you'll be making the 24,000 originally and plus this 28,500. So if you have more capital, you can use so many combinations, permutation and combinations of this particular trade, that you stand to make much more money than you initially planned for. And you will also get a lot of room to maneuver. And even if, let's say, it does not work out, you make only 12,000, but 12,000 will still be around 0.5% on the capital. I have increased everything by same multiple, so our capital will also be more, and then you will be making 0.5% instead of 1% on your capital if nothing works out. But if everything works out, instead of making 1%, you will be making much more than that, 2.5%. This is how I believe you should think about option trading.